This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com. Interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
June swoon. Stocks slam. The Dow loses more than 200 points as a pair of worries converge. What will the Fed do next? And what will Friday's jobs report say?
Food fight. Amazon wants to bring home the bacon to you. The company takes aim at the grocery business, but finds there's another heavyweight in the ring.
And rate spike. The 30-year mortgage breaks 4%. We'll look at what that means for housing and the economy. All that and more tonight on Nightly Business Report for Wednesday, June 5th.
Good evening, everyone. A jittery day of trading, a more than 200-point sell-off, and the Dow falling below the 15,000 level. The catalyst? A batch of tepid economic reports. On the jobs front, payroll processor ADP said American businesses added only 135,000 jobs in May. That was much less than forecast. Many investors are now preparing for a disappointing jobs number on Friday. That's when the Labor Department releases its May employment report. Also today, orders at American factories rose only 1% in April, also below expectations. And the message from the Federal Reserve's Beige Book was also disappointing. The survey of regional economic activity described the recovery as modest and moderate. So not much to inspire stock buying. The Dow tumbled 216 points. The Nasdaq lost almost 44. The S&P was down 22 points. Here's Bob Pisani with more on today's market action.
Traders are confused. Is the job market improving or not? The markets were volatile again today, this time on signs that the jobs market may not be as strong as some hoped. A report on private sector employment by ADP was weaker than expected, as was an employment gauge released as part of a survey of purchasing managers in the services industry. That's causing some to consider lowering their estimates for Friday's critical May jobs report. All this is confusing because Fed officials have been talking about tapering their purchases of bonds as the job market improves. So which is it? Is it getting better or not? So to add to this confusion, we got the Fed's Beige Book today. And Fed officials sounded a bit more optimistic about the economy, noting gains in auto sales and real estate and bank lending, and also noting hiring gains in several districts. So what do traders do when they're confused? Well, they lighten up on their positions, and look what happened. The Dow is down in the last 2 days. This is the worst two-day losing streak since November. If that wasn't enough to worry about, the markets are again being held hostage to the dollar-yen trade. After weakening for almost 7 straight months, the yen has been strengthening the past 2 weeks and did so again today. This is a big trade. Many borrow cheap yen to buy assets elsewhere, like stock in the U.S. But a stronger yen makes that trade more risky. So some are starting to unwind the deal. This may be the biggest investment for many traders in years. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Well, the Dow has had a triple-digit move in 5 of the last 7 trading sessions. Now, long-term investors want to know whether this volatility is just noise that should be ignored. Here's what portfolio manager George Young of Villaire Balanced Fund has to say.
We're long-term holders of stocks. We think it's very important. We think it's very important to make sure that our investors understand that opportunities are now. Don't get worried about day-to-day volatility. Look for the long term. That's our credo.
Another thing that had Wall Street buzzing today, the 30-year mortgage rate topping 4% for the first time in a year, while at the same time mortgage applications fell more than 11%. Diana Olick is in Chicago. That's where some of the nation's biggest REITs, or real estate investment trusts, are meeting to discuss the challenges of rising rates in the commercial and residential sectors. Hi, Diana. You know, that 4% is a bit of sticker shock now that we've all gotten so used to super low rates. How do you think that rising mortgage rates will impact the housing recovery?
Well, look, it's not a good thing, especially when you have rising home prices. Prices up over 12% in April from a year ago, according to CoreLogic. You don't want to couple rising rates and rising home prices when you still have a fledgling housing recovery. Of course, we still have to remember 4% is really historically low. I mean, I bought my first apartment at over 8%, and I was thrilled at that rate. I know that dates me. But going back to this, what's going to happen in the near term is it may take some fence sitters off the fence thinking, what if rates go higher? Maybe I I need to buy now? But in the long term, again, it is not healthy for the housing recovery.
My first mortgage, Diana, 12.75%. That dates me even more.
You're older, see?
I'm a lot older. We've seen a huge drop in refinancings, by the way. So what does that say about the potential effects on the broader economy? Because people do that to lower their monthly payments and free up cash.
Exactly. It takes cash out of their pockets. We had seen the refinances surge a lot over the past several years. They were making up in the high 80% of all mortgage applications. Now they're down to just 68% of mortgage applications last week. People had already refied at the 3.5% rates, so there aren't a lot of people left out there who could refi when rates go above 4%, especially those who might still be in a negative equity position. Refinances has really been juicing consumer spending, whether it be for home remodeling or for other types of purchases, cars, vacations, etc. When you take away those refis, you are taking money out of consumers' pockets.
Well, you know that this is the spring selling season. So with the rates going up, do you think people are now going to rush out to buy a home and lock in a mortgage rate before they go even higher? I mean, what's the trend that you're seeing?
I mean, it could be, as I said, it could get some fence sitters off the fence. But again, we're coming toward the end of the spring season, which was pretty lackluster when it came to sales. There is such low inventory out there right now that's pushing prices higher. This has not been the sales season that we expected to see, despite the fact that we did see very high rise in prices.
All right. Thanks a lot, Diana. Diana Olick reporting from Chicago. And coming up a little later in the program, another issue for consumers, a rash of car recalls and what it means for car buyers.
A big blow for Apple and a big win for Samsung. The U.S. Trade Commission is banning the import and sale of one version of the iPhone and an iPad sold by AT&T, saying Apple's technology violates patents held by top rival Samsung. John Fort takes a look at what it all means.
Apple iPhones, iPads, Samsung Galaxies. As physical objects, they're mostly glass, metal, and plastic, worth no more than a couple bucks. But the design and engineering that makes them work and makes them pretty, that's worth billions.
And that's why Samsung and Apple, the world's most successful electronics giants, are at each other's throats in court and with regulators. Yesterday, the U.S. International Trade Commission ruled in favor of Samsung, saying Apple violated wireless patents with some of its older products.
It's mostly a moral victory for Samsung. Even if Apple has to pull the AT&T versions of the iPhone 4 and two older iPads off the market, it would hit less than 2% of Apple's quarterly revenue.
In terms of total revenue, it's about $680 million, and they're going to be doing somewhere around $35 billion. So this is a pretty small slice at this. And separately is that that's kind of a worst-case scenario because a lot of people probably go into an iPhone 4, and if they can't get it, they might get a 4S or a 5.
And it's really not certain it'll come to that. President Obama has 60 days to decide whether to sign off on the ruling. In a separate announcement yesterday, the White House said it wants to limit how patent holders use the ITC to squeeze their targets.
We love giving you a platform.
What all this really does is put the focus on what Apple will do next. On Monday at its annual Worldwide Developer Conference, we're expecting Apple to show off its first ever major update to the look and feel of iOS, the software on iPhones, iPads, and iPod Touches.
Those things will affect what people buy in the coming year. And while these patent battles don't change the marketplace dynamic at all for now, they do suggest that litigation may be riskier than Apple expected. For Nightly Business Report, I'm John Fort.
Well, forget the iPhone and the Galaxy for just a moment. BlackBerry's make or break Q10 smartphone, that's the one with the physical keyboard, is finally here. The big question, though, will people buy it? T-Mobile, the nation's fourth largest carrier, started selling devices today. Rivals Verizon and AT&T began taking pre-orders today for delivery next week.
Well, like the BlackBerry and other smartphones, Amazon.com has become an integral part of many Americans' lives. We buy clothes, books, and just about everything else from Amazon. And now, the world's biggest online marketplace wants you to buy your groceries there, too, even delivering them right to your door. It worked in Seattle, but will it work in other big cities? And will it make money? Courtney Reagan now with more.
Americans spend $565 billion a year on groceries. After all, everybody eats every day more than once. Now Amazon and Walmart are escalating the national food fight. Over the last 24 hours, Los Angeles was quietly added as the second delivery area for Amazon's online grocery delivery service, Amazon Fresh. The online retailer has been testing Amazon Fresh in and around its home city of Seattle for at least 5 years. Reportedly, Amazon is looking to expand its online grocery business to San Francisco later this year and 40 more areas in 2014. Amazon did not return requests for comment and hasn't confirmed the reports of expansion.
If somebody can save you time by shopping those aisles for you and then ship it and bring it to your house, that's pretty compelling. Now, can Amazon do it effectively and profitably? Time will tell to see if that can happen.
Susquehanna analyst Bob Summers says historically, online grocery hasn't had a lot of success disrupting the traditional grocery market. But this is Amazon. It has the logistics and expertise in place, and if it can back it up with quality product, Amazon is likely to make big waves. Most analysts agree it would be easier for Amazon to gain market share in dense urban markets, easier to serve with delivery than suburban or rural households, and whose residents tend to shop for groceries, more traditional grocers, than at superstores like Walmart. Walmart already sells more groceries than any other U.S. supermarket, just $7 billion less in the annual revenues of Kroger, Safeway, and Super Value combined. The discounter has been airing grocery price comparison commercials, working with First Lady Michelle Obama to offer healthier food options, and just announced a new produce freshness guarantee program. Grocery, online or offline, is a low-profit business. The real profit would likely come from shoppers adding other non-food goods to the cart. Many speculate Amazon and Walmart's real goal with grocery is enticing consumers to add a DVD or two on the way to checkout. For Nightly Business Report, I'm Courtney Reagan.
And still ahead, Chrysler refuses to recall millions of cars the government says are a safety hazard. Is the automaker putting its reputation at risk? But first, a look at some of today's most active stocks.
Two retail reports start off market focused tonight. Walgreens said May sales increased more than 4% and that prescriptions filled at comparable stores increased by 7%. Shares of Walgreens rose more than 1%, closing at $48.63. Ascena Retail, previously known as Dress Barn, reported a 37% drop in profits because of higher expenses and acquisition costs and lowered full-year guidance. CEO David Jaffe said store traffic was lower than expected. Shares of Ascena, which closed down 1% in the regular session, dropped more after the report.
Juniper Networks CEO Kevin Johnson said demand from its telecom customers was, quote, tracking above historical patterns. At the beginning of the quarter, those carriers buy much of Juniper's routers and switchers. So shares jumped on Johnson's comments and held up, closing at $18.54. That's a 6.5% move or thereabouts. The oil and gas driller Helmerich & Payne more than tripled its dividend today from 15 to 50 cents a share. The CEO, Hans Helmerich, said the company was pleased to deliver a meaningful level of yield, and you can bet that shareholders will be pleased to receive it. Shares jumped for a while, then sold off as the market weakened, the company closing at 62.66, off a fraction. Monsanto's chief technical officer called the genetically modified wheat found on an Oregon farm an isolated occurrence, but also said the company is considering whether sabotage might be the possible cause. Korea and Japan have now halted wheat imports from the U.S. Pending further testing, Monsanto shares have lost almost 6% in a week. They closed today at $98.91.
No knives of any size will be allowed on airplanes. The head of the Federal Transportation Security Administration has dropped his controversial efforts to allow passengers to carry small knives on planes. This follows months of outrage from relatives of terrorist attack victims, as well as groups representing pilots, flight attendants, and other airline workers.
Susie, Uncle Sam has taken another step away from being in the car business 4 years after bailing out General Motors. The Treasury is going to sell another 30 million shares it owns in GM after the markets closed Thursday. Another 20 million shares owned by a United Auto Workers Retiree Healthcare Trust will also be put up for sale at that time. No information on the price of those shares has been released. GM, along with the market, down more than 2.5% today, but it does remain still above the IPO price of $33 a share.
Well, another automaker is making headlines for a different reason. Toyota is recalling nearly 250,000 Prius and Lexus hybrid vehicles to fix faulty brakes that may not work correctly. This follows nearly 100 complaints from drivers who said they needed to step more heavily on the brake pedal than they were used to. Toyota says that there are no reports of accidents or injuries related to the problem brakes.
So why do we seem to be seeing so many recalls, and what does it mean for your safety? Here to discuss the implications is Joan Claybrook, President Emeritus at Public Citizen, a national consumer group, and former head of the National Highway Traffic Safety Administration. Ms. Claybrook, welcome. Good to have you with us. Let me just begin with the question we just posed. Are we actually seeing more safety recalls on cars made in Japan, made in the United States, or does it just seem that way?
Well, I think it seems that way. They go up and down. But the most important thing is that the National Highway Traffic Safety Administration has been a tough enforcement agent, and that's what they should be.
You know, one of the recalls that's getting a lot of attention is Chrysler, that they're actually refusing to recall a bunch of their Jeeps, 2.5 million Jeeps, for problems with the gas tank. They're saying that there is incomplete analysis of the underlying data. What do you think of that?
I completely disagree. I think that this has been a very thorough investigation. It was brought to the government's attention by a consumer group that not only crash tested these vehicles, but also evaluated a lot of crashes and also the design. What you have here is a design problem, and statistics do not make any difference if you have a design defect, and that's what this is. The gas tank is located much too far to the rear. It's an old technology. Most companies stopped doing this in the 1970s. Chrysler knew that this was a bad design, and yet they continue to do it.
So why did it take so long for this recall to occur with these cars? Because these were 1993 Jeeps. I owned one of these Grand Cherokee Jeeps, by the way. It was a fine car as far as I knew. But why did it take so long for the government to come forth with this?
Well, I don't know all the reasons why. I think it's most unfortunate. They've certainly known about it. This issue has been brought to the government's attention for a while. There is a relatively new administrator in the government now, and he has taken some good action here. I'm very pleased with what he's done. And this is, by the way, an initial determination of a defect. Chrysler still has the opportunity to change its mind, which I hope it will, because I think it's going to destroy the Jeep brand if it keeps on opposing this. And there's going to be a public hearing and then a final decision, and then Chrysler will have to go to court in order to not do the recall.
So this is going to go on for a while by the time you go through that whole process. If you own one of these Jeeps, what should you do?
Well, I would get rid of it. Or you can repair it. It's expensive. These vehicles are old, but you can repair them. They need to have a check valve on the filler neck where you put the gas in, because it pulls off when the vehicles hit from the rear and gas spews out. And then also you need to put some kind of a bar or reinforcement at the rear of the vehicle to prevent the gas tank from being broken open or leaking.
So Ms. Claybrook, I heard you say that you think this could ultimately destroy the Jeep brand if they persist in opposing this recall. Explain.
Well, Chrysler bought AMC specifically for the Jeep brand. It's a great brand, and people love the concept of the Jeep, and they love Jeeps. So if you continue to have a large number of your vehicles have a safety defect, and you refuse to fix it, people are going to question the safety of the Jeep brand. And I think that's a terrible mistake on Chrysler's part. It is expensive to do this recall, but if I were them, I would do it and get it over with immediately.
Joan Claybrook, thank you very much for being with us this evening. Joan is President Emeritus of Public Citizen.
And coming up, a trip to West Point, where we'll show you why the minting of coins is as good as gold. But first, let's get a check on the biggest losers on the S&P today. Wall Street regulators have okayed stricter rules for money market mutual funds, a popular investment vehicle that proved to be a major risk during the financial crisis. The Securities and Exchange Commission approved a new 2% withdrawal fee on some funds and the ability to let the value of other money market funds float instead of having a fixed value of $1 a share.
A one-day plunge in gold prices back in April sent demand for American Eagle gold coins soaring. Demand was so strong, the government ran out of them. But now Uncle Sam is minting those popular coins again. Sharon Epperson has more on what goes into minting those investments.
From verifying the quality to stamping and packaging coins to be shipped, every aspect of production of gold and silver coins at the U.S. Mint has been ramped up to full speed to meet the frenzied demand from investors.
The smallest denomination, which obviously is the less expensive for the market and probably more appealing to small investors, the demand for that exceeded our capacity in April of this year. We've got plenty of blanks now, and we're back in business on the 1/10 ounce gold coin.
This is where the production process begins. After Fort Knox, the second largest holdings of gold reserves in the U.S. Treasury are here in West Point, New York. At today's prices, one 400-ounce bar of gold is worth more than $500,000. And in this vault alone, there are more than $2 billion worth of gold.
There are high fine gold bars that are sent to the vendors to alloy, melt down and alloy to produce the blanks that we make the gold coins with.
Ellen McCullum is the plant manager at the West Point Mint. She says a perfect die is the key to a perfect coin. It's the template, with images that are imparted on each side of the blank disc that come back from vendors.
Once they come into the building, they come in to be checked for quality and for assay. And this is part of the process that you see here. After they're checked by the lab for quality control and assay, they immediately go into our press, as you can see over here.
Once stamped and inspected, coins are put into tubes and boxes with equipment that can package up to 120 coins per minute. The production is quite a process and comes at a cost, accounting in part for the premium buyers pay for these coins. For Nightly Business Report, I'm Sharon Epperson in West Point, New York.
And finally tonight, we have a winner. 84-year-old Gloria McKenzie of Zephyr Hills, Florida, has claimed last month's record $590 million Powerball drawing. McKenzie explained the delay in coming forward by saying her son, who's an attorney, was helping her with legal and financial matters before opting to take a lump sum payout of $370 million. She also said that the person ahead of her in line allowed her to cut ahead to buy what turned out to be the winning ticket. That person must be kicking themselves.
That is one of the great stories I think I've heard in a long time. Please go ahead of me. You know, 84-year-old lady in Florida. That's beautiful.
And after taxes, she walks away with $270 million. Still a lot of money.
Smart move, taking the lump sum.
That's it for us, Nightly Business Report for tonight. Thanks so much for watching. And remember, this is the time of year your public television station seeks your support.
And on behalf of your public television station, we do thank you for your support. Have a good night, everybody, and we'll see you back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
I'm Susie Garrett with the Nightly Business Report News Brief. Stocks tumbled today on growing concerns about the Federal Reserve pulling back on stimulus measures and a batch of disappointing economic reports. The Dow fell 217 points, the Nasdaq lost almost 44, the S&P down 22 points. Only 135,000 private sector jobs were added in May, far fewer than forecast. Orders at American factories rose only 1% in April, also below expectations. Rates on 30-year mortgages topped 4% for the first time in more than a year, sending mortgage applications plunging 11% last week. And the Federal Reserve reports economic activity in most of the nation has been modest and moderate, getting help from higher home construction, consumer spending, and steady hiring. Be sure to tune into Nightly Business Report right here on your public television station.